Welcome everyone to Vested Interest. This is Shane back for the weekly portfolio update every Sunday morning at 7:30 a.m. We do this, but before we get into the video, I'd like to take a moment to say thank you to everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who have subscribed to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time on this channel, we focus on dividend growth investing, buying stocks in good companies. The best way to do anything, keep it as simple as possible, in my opinion, so it's not rocket science. I just continually dollar cost average into my portfolio, dividend growth portfolio, and growing companies with positive cash flow that covers the dividend, the high return on their invested capital. I cover all my investments into the portfolio on this channel every week, every Sunday morning. That's what this video is. We did add $1,558 to the portfolio and some change. You'll see that here in a little bit. It's free to see what I'm doing. I cover dividends paid. I cover any options that I'm in, any potential stocks that I sell out of. And I do that again every Sunday morning. And for those of you who maybe have not done so, take the time to hit that thumbs up if you are a dividend growth investor. Hit that subscribe button, join us on this journey to financial freedom, join the vested interest community, and hit that notification bell so you're notified whenever we put out any new content. So let's get into the portfolio update. And we will start with options. On January 29th, the last option that we wrote for the month of January, it was actually two contracts, one for Nutrien, ticker NTR. This is out of the material sector. We wrote a contract for the $51 strike price. This was a covered call, so we own 100 shares of Nutrien. We own a little more than 100 shares, but the one contract is 100 shares with a expiration date of February 2nd. And as you can see down here, it did expire. We kept those shares, right? It was just at 51, so they must not have wanted the shares at $51. That's right where it closed out at, actually 51. I couldn't have called it better on that one. But I kept those shares. They didn't get called away. So we received $33 or $34.45 in options premium. And we had one contract on Pfizer, ticker PFE, this is out of the healthcare sector, $28.50 strike price, the same expiration date, February 2nd, and the same result. It was below the $28.50 strike price, so we kept those 100 shares and the $22.45 in options premium. And that $56.90, that's total, that went right back into the portfolio. That's part of that $1,500 that we put into the portfolio is this $56.90. And that is the idea behind running these options on positions we already own 100 shares of. I'm continuing to add to these positions as well. So this options premium really went right back into Pfizer. I bought 4 more shares of Pfizer. You'll see that here in a minute. So really this went right back into helping buy more shares of the country, of the companies that I'm running covered calls on. So building these out, and then eventually if I have 200 shares of Pfizer or 200 shares of Nutrien, it might become 2 contracts. And that's the idea of continually trying to increase the capital back into the portfolio. Now, on to the first dividends of the week. It was a great week for dividends. We received $401.63 in dividends total, all on February 1st. I don't know why that says the 29th and 30th. Didn't update the dates, obviously. On the 1st, we received 5.60452 shares of AT&T, ticker T, out of the communication sector, $100.15. So we have the drip set on. So anytime a company like AT&T pays out dividends, it goes right back in and buys more shares. That's what you're seeing here. This $115 bought 5.60452 more shares of AT&T out of the communication sector. We also received dividends from CVS Health Corporation, ticker CVS, out of the healthcare sector, $93.11. And that $93 went right back in and bought more shares, 1.26215 shares of CVS. And Verizon, the biggest payer this week, $208.37, ticker VZ, also out of the communication sector, went right back in and bought 4.94468 more shares. Very good week in dividends, $401.63. The new shares that those dividends bought added an additional $22.72 into the portfolio over the next calendar years. Now on to the first additions into the portfolio. We did add $891.64 on the 29th and the 30th. We added 10 more shares of BABA, ticker BABA. This is Alibaba Group. This is that Chinese company out of the consumer discretionary sector. We've been back down in the 72. I think they even finished the week out in the 71, high 71 range. So hopefully this is going back down again. I was buying this last week, or no, the week before in the $68 range. Then it ran up to 74. Now it's back in the 72 range. I'd like it to stay 72 or under, but I'm going to buy this one, fill this out to 100 shares so long as it stays under $80 per share. We picked up those shares at $72.93. We added 4 shares to our Pfizer position. We mentioned that earlier. This is one I'm running the wheel on, right? If they get called away, we'll just continue to run the wheel on. Picked up 4 more shares there, this side of the healthcare sector, at $27.11. And we bought 2 more shares of Enterprise Product Partners, ticker EPD, out of the energy sector, $26.97. Again, all total $891.64 invested, and that provided with these new shares an additional $20.84 in additional passive income over the next calendar year. And we weren't done. We went right back in and bought $666.93 more additions to the portfolio. And with those funds all on February 2nd, we added 1 share of Valet, ticker VALE, $13.34. This is out of the material sector. Just dipped under my cost basis, and I had a little bit of funds left at the end of the other purchases, so I bought 1 more share there. HPQ is actually just slightly above my cost basis, but we took the opportunity to add 4 more shares to HP Inc. out of the information technology sector at $28.73. We added 4 more shares to Realty Income, ticker O. This one has really fallen back again. Those 4 more shares we picked up at $54.06 per share. This is out of the real estate sector, monthly paying REIT. I like this one here. I really like the price. It's bringing down my cost basis, bringing up my dividend yield and potential future returns. I believe this one's a little undervalued right now. 1 more share. This is our weekly shares that we're going to be buying, right? The Schwab SCHD ETF, $77.04, picked up 1 more share, and the Vanguard Total Stock Market, ticker VTI, another ETF at $245.39. Doesn't matter what the price is, we're just going to pick up 1 share every week the rest of this year, at least the rest of this year, if not longer, and at least get these both to 100 shares. And these new funds, the $666.93, and the funds that they are the new shares that they added an additional $24.48. All total invested $1,558.57, which added $68.04 in passive income to the portfolio over the next calendar year. Now we're going to take a look at the sector weights. How is this pie broken down? We have 9.64% of the portfolio sitting in communications, 3.42% makes up consumer discretionary. Consumer staples is 12.16% of the portfolio. Energy is sitting at 6.31%. Financials at 8.3%. Healthcare is the biggest slice of the pie at 16.65%. Industrials at 8.03%. Technology sitting at 7.52% of this portfolio here. Materials makes up 11.77%. This is now in 3rd place. Consumer staples has taken over 2nd place. And 4.6% or 4.63% of the portfolio is sitting in utilities. REITs in real estate makes up 10.79%, and ETFs is sitting at 0.78, less than 1% of the overall portfolio. Over here to the right, you're looking at portfolio sector weights. These same percentages break down to the pie here, and then you have the dollar amount allocation over here on the right-hand column. Now, here's what a lot of you like to see every week, and I do show it every week. It doesn't matter if the market's up, whether the market's down, whether the market's floating sideways. I'm going to show you my entire portfolio, what I've bought, what I've sold, how many shares I hold, all of that good information here. Here's the ticker in this column, total shares I own of each position, current price as of the close of business on Friday, the market value as of the close of business on Friday, my average cost per share, how much I have into each position, return, whether I'm up or down. You'll see it here. Obviously, if you're in the red or I'm in the red here, that's down. And over here is the percent return. Same thing. In the green, I'm up. In the red, I am down. What sector each position falls in, whether they're a quarterly, monthly, semi-annual payer, or annual. I have both semi-annual and annual payers in here because BABA only pays once a year. So they're not a semi-annual. They only pay the once. These two, SBSW, Sabini Stillwater, and Valet, they do pay semi-annual twice a year. Current dividend yield as of the close of business on Friday, my yield on cost, the portfolio weighting. So what we saw on the previous slide was all the sector weightings. This is each individual weighting. Estimated annual income in this column, what payout months they fall in, their dividend growth year over year, and 15% of their 52-week low. This is basically gives me an entry point in a position that I'm looking to add to whenever it's not under my cost basis anymore. This gives me, okay, I don't want to go over this. Let's look at this, $80.59, for example. So 72.26 is slightly under my cost basis right now, but whenever this jumped up to 74, we kept buying it because we're willing to buy it up to $80.59 within 15% of its 52-week low. So that's what this column is here for. So currently we have 5,957.309 shares. Market value is $206,958.07. I don't worry about this number. My purchase price, how much I have into it, $204,211.96. I am up $2,746.10 or 1.34%. This fluctuates. You've seen me down as low as 5 or 6%. You've seen me up as high as 5 or 6%, 8%. I don't worry about whether I'm up or down. I'm focused on this number over here. Current dividend yield is sitting at 4.557%. My yield on cost slightly higher at 4.619%. And this red circled number right here, $9,432.07, is what I am focused on. Whether the market's up, whether the market's down, whether the market is floating sideways, I am focused on the passive income, the dividends paid out by all of the positions in the portfolio. Continues to go up week over week, month over month, quarter over quarter, year over year as I add more capital into the portfolio. As positions like EPD, which just increased its dividend this month or this week, increases their dividends as I add more companies or add more capital, and as these companies in here pay out dividends, as we saw with AT&T, Verizon, and CVS this week, which buy more shares. That is that dividend snowball in effect. Me adding capital, the companies increasing their dividends, again, like Enterprise Product Partners did here. This was 50 cents. They just increased it up to 51.5 cents. So that is the dividend snowball, and this is what I'm focused on, $9,432.07. And that dividend growth year over year right now is at 5.34% on average. Well, let me know down in the comment section below, what positions did you add to this week? What dividends did you receive this week, and what options are you in? You can pause this and go through it if you'd like to stay a little longer. But that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. It doesn't cost you a thing but a second of your time, and it really does help out a small YouTube channel like me. Share with anyone you think that might find value. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do a Monday through Thursday stock pick of the day series. When I get out of work, I look at a stock that's pulled back on the day to see if it is presenting any value. So if you have a company you'd like me to add to that list and do a video in the stock pick of the day series on it, go ahead and drop it down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can't use money. You should never invest any amount. Not confusing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice counsel of a certified financial advisor.